Then friends, I move to the next question, May 2010 old syllabus. Examine critically in the context of the provisions of the Act, can a assessing officer issue a notice under section 148 to reopen the same assessment order on the same grounds for which CIT had issued a notice under section 263 of the Act? Point here is, what is 263 first of all? Commissioner of Income Tax has got a revisionary power, and this revisionary power is stated in 263 and 264. 263 is what? In case if the Commissioner of Income Tax regular feels that the order passed by the assessing officer is prejudicial to the interest of the revenue, then he can make a revision order. Already Commissioner of Income Tax exercised his power and made the revision order. In that process, can the assessing officer can issue a notice under section 148 stating that I will take up the case for what is it, reassessment. Your section clearly says when already the case is a subject matter of a revision or an appeal, again there is no point in allowing the assessing officer to issue a notice under section 148. That is, assessing officer, if he has got a reason to suspect that income escaped the assessment and nobody else found out that, then he can do. Already some higher up got the point, initiated the things, why again you have to send it? So कैसे लिख लेते? लिख लो, this is very important, put it under 147. You see how many times 147, 148 is appearing in your examination paper. Write down. That is, proviso to section 147. Proviso to section 147. Assessing officer may assess. Assessing officer may assess or reassess, may assess or reassess such income, comma, other than the income involving the matters which are the subject matter of any appeal, comma, reference or revision, comma, which is chargeable to tax, and has escaped the assessment, See, just to make you to remember this, I am saying like this. There is a child. Who is the best person to assess that particular child? Mother. Now, mother made a wrong assessment. Then on that particular child, who are the two other people? One is the father, another is the teacher. Father is like commissioner regular, and teacher is like appellate authorities, right? child did a mistake and mother could not assess properly. Then the father understood that particular mistake and initiated the scolding. At that point of time, mother can say that you stop your scolding, I will start my assessment of this particular child. Is it correct? Or when the teacher started scolding the child, can the mother say, you keep quiet, I will start? No. जब करना था मदर, इसके पहले, before those two identify, she should have started it. Having not started, let other people continue with it. नहीं तो बच्चे मर जाते. एक तरफ फादर, दूसरे तरफ मदर, if again starts making the reassessment. After all the SSEs are also like children, right? That's where we have got settlement commission, kar vivad samadhan, one-time disclosure. Because what is our principle? There should be a room available for an erring taxpayer. So ultimately this is very, very important point. That's the reason why I explained with an example. The law is framed in such a beautiful manner by taking into principles of natural justice. You can't allow the assessing officer to issue a notice under section 148 to take up the case for the reassessment if there is if that matter is already there, a subject matter of a revision or appeal, is a straightaway point which I would like to drive. Then friends, I now take up the November 2009 new syllabus question. Look at, Mr. X filed a return of assessment in 2007 and 8 declaring the income to be 3,25,000. He had been assessed under section 143(3) and the assessing officer made the following additions. One is unexplained cash credit for the want of confirmation from the creditors 2 lakhs. Then disallowance in respect of travelling expenditure for tour to Chennai 46,000 for affecting the sales there. Mr. X failed to establish the expenditure had been incurred for the purpose of the business. At a later stage, he has been served with a notice under section 148 for the income escaping the assessment in respect of the assessment year 2007 and 8. During the course of reassessment proceedings, assessing officer sought to add unaccounted sales of 4 lakhs made at Chennai. So during the course of hearing, the SC produced the confirmation from the creditors and requested to delete the addition for unexplained cash credit of 2 lakhs and allow the deduction of travelling expense of 46,000, discuss the validity of the contention raised by the SSC. Of course, all these questions, unless you feel it is difficult to understand the answer or write the answer there. First, feel the situation, which is most important for a professional. Kya hua? Kya hua? One SSC filed a return. Assessing officer disallowed 2 expenditure on the pretext that there is no proper evidence. Purchases लिख दिए उन्होंने, creditors को create करके रख लिए. Income tax people asked to bring the confirmation from the creditors. Then he could not produce the same. He has got business expenditure. So that also, travel expenses, for that also he could not produce the bills. Disallowing that, they completed the assessment. बाद में क्या हुआ, उन लोगों को और कुछ इनकम एस्केप्ड द असेसमेंट बोल के इंफॉर्मेशन आए, उन्होंने 148 में नोटिस देके 147 में रीअसेसमेंट को ले लिए. When they took the case for reassessment, on other income which escaped the assessment, at that point of time this fellow comes and says, sir, now I got the confirmation from creditors. Now I got the bills for that travel expenses. Kindly take them into consideration. Can he say so? Further, what your Supreme Court is a famous judgment of Supreme Court in Sun Engineering Private Limited. This question was tested, or this concept was tested at least 4 times. See, first thing is, on reassessment, original assessment remains. It is not wiped off. It is not like revised return. Once you file a revised return, your original return will go away. Revised return will take the, shape of the original return. But once case is taken up for reassessment, original assessment is not getting wiped off. Matters which are lost in original assessment, which have since acquired the finality, you cannot make an appeal and you cannot claim them in the reassessment proceedings. So expenses which are not claimed in the original assessment equally cannot be claimed in the reassessment. Of course, they found a new income. Against that new income you have got some expenditure that can be claimed. Not against the income which already got assessed. Against that, if some expenses are there which you have not claimed or you could not show the evidence at that point of time, again in reassessment you cannot bring them and show it. So write down, friends, quickly the point. Supreme Court judgment in Sun Engineering Private Limited. Supreme Court judgment in Sun Engineering Private Limited. Point number 1. Matters lost in original assessment. Matters lost in original assessment for which no appeal is made. For which no appeal is made. Cannot be claimed in reassessment proceedings. However, expenses related to income which has escaped the assessment, can be claimed. So the next question is November 2009 new syllabus. Does the assessing officer have got a power to make any adjustment to the income disclosed by the assessee in the return of income in the course of a processing of the return under section 143(1)? What is this 143(1)? Intimation. You are filing your return of income, you are getting intimation under section 143(1). Today, practically this intimation gets generated with the computer making the processing of it. There is no human intervention there. But even if the human intervention is not there, point is how you wrote the program. Because after all, computer, how it processes? You have to write a set of instructions. And those instructions must be written by looking at what the law is saying. At the intimation stage, what can be done? See, if you want to make any adjustments, First you should give an opportunity to the assessee, and you should ask the assessee for the information, then you are asked to carry out the adjustment. For that only you have got 143(2) and consequently assessment under section 143(3). At 143(1) intimation stage, what can be done? What can be done? What sort of adjustments can be possible? First is, what is apparent can be adjusted. Let us suppose if an assessee says under section 80C, I am claiming 2,40,000 rupees of the deduction. Very well we know that under 80C maximum is 1 lakh, with infrastructures, bonds and all, it can get extended by 20 more thousand rupees. So altogether if it is 2,40,000, definitely to that extent the disallowance will come. Then in the computation statement, you are writing a loss from house property and adjusted the same against the salary income, right? But if you see the income tax return, there is a statement or a schedule for carry forward losses. There also you have filled loss to be carried forward, okay, whatever the loss of that house property you have written. Is it not inconsistent? On one hand, already this loss you adjusted against the income. On the other hand, in the schedule you are writing a loss to be carried forward. Then definitely you get intimation under section 143(1) by giving a disallowance for that particular loss which you have adjusted against the salary income. Later on, of course, you will go and say, it is my mistake that I have done like that, kindly delete that and give the benefit like this. But what sort of things can happen with 143(1) intimation? That is, arithmetical errors in the return can be well corrected. Second is, incorrect claims can be corrected. Third is, correct computation of the income tax and interest if wrongly computed. Similarly, correct relief in case if wrongly claimed, and correct prepaid taxes. These sort of things can be corrected with in the 143 intimation. Write down, friends. That is, under section 143(1), under section 143(1), the following corrections can be carried forward, can be carried out. The following corrections can be carried out. Number 1, correct the arithmetical error. Number 2, correct the incorrect claim. Correct the incorrect claim apparent from the information. Incorrect claim apparent from the information. Correct the computation. Correct the computation. Next, correct the relief. Then correct the prepaid taxes. Today this is a very big issue. That is, we say this is the TDS. They say in your form 26AS, this is the amount. So whatever the amount you claimed will be disallowed. What is appearing in 26AS, they are giving the credit. So all these sort of things can happen with 143(1) intimation. Then friends, I move to the next question. That is, this question is given in November 2009 old syllabus. Look at, SC failed to deposit the amount of tax under section 140A for 10,000 but filed the return of income in time. Assessing officer, besides charging the interest as per section 234B and C, also issued a show cause notice levying a penalty of 2,000. SC says there was no provision in the act to impose a penalty for non-payment of tax under section 140A. Friends, try to understand. SSC required to pay the tax and interest that is due till the time he files the return of income in the form of self-assessment tax under section 140A. In case if he is not paying that tax or the interest, then he shall be deemed to be an SSC in default. Then SSC shall be liable for interest under section 220 and penalty under section 221. So as per section 221, assessing officer can levy a penalty in case if the SC has not paid the tax under section 140A. And this penalty can go till 10,000 rupees. So in that case, after all he levied only a penalty of 2,000, you can't contest it. So learning point is what? You write down. That is, in case if the SSC, fails to pay the self-assessment tax under section 140A, assessing officer can levy interest under section 220, can levy interest under section 220, and penalty under section 221, up to rupees 10,000, up to rupees 10,000. Then friends, I move to May 2009 question. See, as we move from 2011 to 1994 like that, slowly repetitions start coming. See, here the question, three parts are there. First part, let me read. Assessment was made under section 143(1) for the assessment year 2007 and 8. SC has received a notice under section 148 on April 6, 2010 for reopening the assessment. Can the SC challenge the legality of notice on the ground of change of opinion? Is a point. See, intimation is a given. Subsequently, what has happened? A notice is given issued under section 148. First thing, as a student you have to check is what? Is it within the time limit the notice is issued is a point. See, for the assessment year of 2007 and 8, can a notice under section 148 can be given on April 6th, 2010 is the first issue to be addressed. And under what circumstance the notice can be issued? First thing is, if you are through with section 147, it clearly says what? If the assessing officer has got a reason to believe that income chargeable to the tax for the assessment has escaped the assessment, then he may subject to the provisions of section 148 to section 153. He can assess, reassess such income and also any other income which has escaped the assessment and which comes to his notice subsequently during the course of the proceedings. And of course, if the matter is before the appeal or revision authorities, then the assessing officer cannot assess or reassess such kind of income. So now the point is, SC can demand a reason why, what for your reopening of my, what is it, case. It can't be just like that I feel like, or I have time to do it, or earlier I thought you are a good person, now I changed my opinion that you are not good, so that's the reason why I am sending a notice. Chalta waisa thodi? No. SC can always demand a reason for reopening the assessment, and assessing officer is duty bound to supply the SC the reasons recorded by him to issue a notice under section 148. So in case if the assessing officer has got a reason to believe that income chargeable to the tax has escaped the assessment, he can take up the action under section 147. So even if intimation is given, still the case can be taken up for 148. Because it is not something that it is taken up for a scrutiny. By issuing a notice under section 143.2, if the case is taken up for 143.3, then we can think of whether it can be taken up for 148. Point is, 143 intimation is not something related to is similar to 143.2. So in that scenario, what we say, in case if there is a reason to believe that there is an income escaping the assessment, he can take up. Just because he has changed his opinion on us, sending a notice under section 148 is not valid. So write a small brief about 147. What are the noteworthy points? As a students, try to understand, when solution is before us, it is very easy to discuss. In the exam when you sit, even if you get confused, at least you should write what 147 says. That's what the whole discussion for 3 hours or 3.5 hours. Objective is only to make the student to become confident on how to write from that and what to write from that section. If you learn that extent, that is enough. We are not bothered about your correct answers. We are only bothered whether you can touch the sections. So what 147, which is a most repeatedly tested question. So write down some brief points on 147. Point number 1. As per section 147, if the assessing officer has a reason to believe, that any income chargeable to tax has escaped the assessment, tax has escaped the assessment, then he can take up the case for reassessment. He can take up the case for reassessment under section 147 by issuing a notice under section 148 within the time limits prescribed under the Act. Exceptions. In case if the income is subject matter of, in case if the income escaping the assessment, is a subject matter of any appeal, comma reference or a revision, then reassessment under section 147, is not possible. Next point. Notice under section 148 is invalid. If it is given on account of change in personal opinion, कब देना? In case if he has got a reason to believe that the income escaped the assessment, but not when personal opinion is changed. Next bit in this particular question, friends, is it possible for the assessing officer to initiate the proceedings under section 147 in respect of the matters involving subject matter of an appeal? Already we have studied, that is it is very clearly provided under section 147 that if the income escaping the assessment is a subject matter of an appeal or revision, then the assessing officer cannot initiate the proceedings under section 147 is a point. Then friends, third bit is the assessing officer has no power to make any adjustment to the income returned by the assessee while processing the return of income under section 143(1). Examine the correctness of the statement. Just now you have written 143(1) intimation देने वक्त क्या क्या adjustments कर सकते, लिखने का जरूरत नहीं, और एक बार सुन लो वाह वाह बोल के. क्या है? अरिथमेटिकल एरर्स को करेक्शन करने के लिए, सिमिलरली इनकरेक्ट क्लेम्स अपरेंट फ्रॉम द रिकॉर्ड को करेक्शन करने के लिए, और इनकरेक्ट कंप्यूटेशंस को करेक्ट करने के लिए, इनकरेक्ट क्लेम्स ऑफ प्रीपेड टैक्सेस को करेक्ट करने के लिए, you can make adjustments while issuing a intimation under section 143(1). That's what. Is there a repetition in the CA final or CA exam? very much. More particularly in a theory subject, concepts are now exhausted. If somebody is failing CA means it is not that they have not studied. They have not understood the requirements. They have not locked the chapter by exhaustively doing with the previous questions. So it is not pinpointing at your weakness. I am only saying that if you have a weakness of not looking at the previous questions, kindly correct it. In any subject, preparations are already over, already you have done with. This time don't again reopen your books, carry out with the suggesteds. Coolly go and write the exam. This time definitely you will pass. But without looking at the previous suggested answers, in any of the subjects, if you are writing, marginally increase could be either 5 marks more or 5 marks less. Again and again I am cautioning for those who are repeaters, kindly don't redo with the entire thing, because already subject is there for you. Only you have to see is how that is to be brought to the presentable manner. Then friends, I move to the next question, November 2008. State the circumstances under which a certificate can be issued by the assessing officer to the tax recovery officer. This is also a general question. See, assessing officer issued a demand notice and you are not paying that particular amount which they demanded. Then assessing officer will ask the tax recovery officer to go and जब्त करके सेल करके टैक्स कलेक्ट करो. मगर इंग्लिश में कैसे बताए देख लो, सुन लो. As per section 222, when an assessee is in default or is deemed to be in default in making the payment of tax, tax recovery officer may draw under his signature a statement in the prescribed form specifying the amount of arrears due from the assessee. Such a statement being hereinafter called in this chapter, that is in the second schedule, as certificates, and shall proceed to recover such from the assessee the amount specified in the certificate by one or the other modes. क्या क्या कर सकते हैं आप? Attach and make sale of mobile property. पहले mobile properties को बेच दो, बाद में attach and sell the assessee's immobile property. Sir, is it that the moment tax recovery officer वहां गए तो उन्होंने दिखाते क्या, यहां मेरा immobile property है, वहां मेरा mobile property है, वैसा थोड़ी दिखाते हैं क्या? नहीं दिखाते. उसको क्या करना? ला लो उसको, कहां पे? प्रिजन में लगा लो. Arrest the assessee and detain him in prison. Then appoint a receiver for the management of the assessee's movable and immobile property. Samadhana Dandopayan. तो क्या करना? That is, attach and make sale of the movable and immobile property and put that fellow in the jail and appoint a, what is it, receiver. Right? Keeping in view of the time factor, I am not troubling you to write. Then friends, November 2008, one more question. This is a Supreme Court judgment in God's India Limited. A fresh claim before the assessing officer can be made only by filing a revised return and not otherwise. Yes friends, assessing officer is not our boyfriend or girlfriend for us to simply write a letter और उसको एक SMS नहीं तो एक मेल बिछाने के लिए। जब आप कुछ नया नया क्लेम लगाना चाहिए तो again you make a revision of your what is it return. You file a revised return, and through revised return you make a fresh claim. And simple writing a letter and stating tomorrow that that letter is not being considered. Why like that quarrel? Supreme Court says that first, whenever you want to make a fresh claim, make a revised return. Write down, friends. Supreme Court judgment in Goetz India Limited, GOETZE, Goetz India Limited. Fresh claim before the assessing officer can be made only by filing a revised return, and not through a letter, So also your May 2007 question, friends. Here also one SSC made a fresh claim by writing a letter. There also the same answer, Supreme Court judgment, that is fresh claims can be made only by filing a revised return and not through by a letter. Now I go to the May 2007 question. Look at the May 2007 question. An individual filed his return of income for the assessment year 2011 and 12 on 15/6/2011. ये क्या चीज है? Assessment year 2011 and 12 का रिटर्न कब तक करना? Till the end of the relevant assessment year. When he did on 15/6/2011. So this is something a belated return, because belatedly you can file a return up to what time? 1 year from the end of the relevant assessment year, or before the completion of your assessment, whichever is earlier. So there he declared an income of 1,20,000. Later he discovered and he had not claimed a particular deduction amounting to 2,10,000 while computing his business income in the said return. He filed a revised return on 30th/1/2010 declaring a total loss of 90,000. Assessing officer proposes to disallow the carry forward of the business loss amounting to 90,000 for the reason that revised return declaring the loss for the first time was filed beyond the time limit prescribed under section 139(3). Examine the validity of the proposed action of the assessing officer. First, try to understand, friends, this question aims to test your knowledge on two aspects. All of us know that for a loss to get the eligibility to be carried forward, a loss return is to be filed under section 139(3) before the due date prescribed under section 139(1). And if you don't file your return within the loss return within the due date, the disadvantage part of it is what? You will not be able to carry forward such loss. एक आदमी क्या करे? Belatedly he filed the return. Later on he want to revise the belated return. And what you studied? A belated return cannot be revised. So this is what the whole issue in this particular problem. That is the reason why if you are tomorrow a practitioner, you should never be bothered about a person who has got a refund or who has got a taxable income. But you should always take care of the persons who are incurring the losses. Right or wrong, file some return within the due date. Once you file the return within the due date, then you can revise such kind of the return. But if you file when you have a loss, a return belatedly, subsequently if you want to make any revisions, revision is not possible. तो 2 points लिख लो. That is, a belated return cannot be revised. A belated return cannot be revised. Then loss cannot be carried forward. Loss cannot be carried forward unless return is filed before the due date. Before the due date. Then friends, I move to the November 2006 question. C. Examine the proposition that assessment on the basis of the invalid return is void ab initio. And then when can an assessment be annulled? Then the third bit is assessment completed by the assessing officer was set aside by the ITAT with a specific direction to re-examine certain disallowances. Before the fresh assessment is made, assessing officer discovers that some other income has escaped the assessment. How should he proceed to make the fresh assessment? Of course, one after the other we will take up. C. That is invalid return. Sudipti is a person known to me. She went to America, right? I filed her return and I only signed on behalf of Sudipti and filed the return. This is a forgery. Later on, the assessing officer completed the assessment. Now the Sudipti says it is an invalid return, and an invalid return is void ab initio. So on that invalid return you cannot complete the assessment. Is she correct? Yes, very much she is correct, because assessment on the basis of an invalid return is void ab initio. So an invalid return is in the eyes of the law is non-existent, and the position is that if no return has been furnished, in such a case a notice under section 143(2) cannot be issued because the section presupposes that valid return having been filled. See, assessment करना बोले तो 143(3) में 143(2) में नोटिस देना पड़ता, और 143(2) नोटिस देना बोले तो क्या है? There must be a valid return that is already filed. If there is no valid return, आप 143(2) में नोटिस नहीं दे सकते. जब 143(2) में नोटिस नहीं दे सके तो assessment under 143(3) नहीं कर सकते. So write down, that is assessment on the basis of invalid return is void ab initio. Then when the assessment can be annulled, तो क्या है? सुन लो पहले, सब लिखना बोले तो भी नहीं होता. When assessment can be annulled, see, what we are expected to, if we don't do it, it becomes an invalid return. Similarly, what department is expected to do, if they don't do that and carry out the assessments, they also become invalid. तो assessments करना बोले तो उन्हों क्या करना? As a practitioner, you should also know. देख लो how beautifully it is presented. This is all important information for you to tomorrow to become a successful tax practitioner. See, without issuing a notice under section 143(2), assessment is done under 143(3). So that assessment becomes annulled. Similarly, without issuing a show cause notice, best judgment assessment got completed. Then also it can be annulled. Time limits are prescribed under section 153. Beyond that time limit, your assessment got completed. That also annulled. Similarly, assessment is made on the basis of an invalid return. That is also annulled. Without issuing notice under section 148, reassessment is completed under 147. Annulled. Similarly, within the time limits prescribed under section 149, to issue a notice under section 148, you issued a notice after the time limits prescribed under section 149 and carried out the assessment, reassessment, annulled. So, like that, what we are saying is, when what is expected legally as a procedural protocol, if it is not adhered, then the assessment becomes annulled. Of course, generally to keep in your mind when the assessment can be annulled, write 2 points. That is, where law prescribes issuing of a notice and the assessing officer without issuing such notice carried out the assessment. Then assessment gets annulled. Similarly, where the law prescribes time limits, either for issuing notices or for completion of assessments, and assessing officer disregards the same, then the assessment gets annulled. Then last point, assessment on the basis of invalid return. Assessment on the basis of invalid return. Third bit is a complex bit. IT-80 is annulling the assessment, asking the assessing officer to make a fresh assessment. Right? Then in that situation, can he take up a fresh income which is escaping the assessment and can bring it into that fresh assessment? What we are saying is, when income tax abilitated authority set aside the original assessment, ask the assessing officer to carry out the fresh assessment, And if that order is a specific order, then according to their directions you have to complete the assessment. If it is a general this thing, very well you can take up other incomes which escaped the assessment. So if it is a specific, first carry out according to their specific direction the assessment. Anyhow, after that you issue a notice under section 148 and take up the case under section 147. In case if the order passed by the ITAT is not specific, then while making the fresh assessment, the assessing officer can well take up the income escaping the assessment. If the ITAT's order is a specific order, then you carry out the fresh assessment according to those directions, and then later on after completing that assessment, you make a fresh issue of notice under section 148 and take up the case for section 147. Since time is the factor, I am not asking you to write, otherwise I love to do that. Because only when you write, I personally feel it can be. Those who are listening my lectures on a e-flat form, that is in your house before a computer, you stop and write down, right? But those who are sitting in this class, probably they will be not having that facility. Chalo dosto, May 2006 ka question. X, an individual, filed his return of income for the assessment year 2011 and 12 erroneously by offering for taxation interest received from the notified relief bond exempted under 10 clause 15. Assessing officer completed the assessment under section 143(3), accepting the income returned by X. X furnished complete particulars relating to the interest income in the return of income. X approaches you for your advice regarding the steps to be taken to secure the exemption of income. Advise the X. Okay. A income which is otherwise exempted, knowingly or not knowingly, you offered it as an income and they completed the assessment. Now what recourse the SSE is having? पहले recourse क्या है? That is, he can very well take the help of 154 and can request the assessing officer to correct the mistake which is apparent from the record. If that is not the case, you go to the Commission of Income Tax Appeals under section 246A. Or the third window open is you ask the Commission of Income Tax Regular to take up the case for the revision under section 264, not 263, 264. So you should know how to cry, where to cry. पहले किसके पास जाके रोना? Regular assessing officer. बाद में you should think of whether to take the route of appeals or to take the route of revisions. But for you to go to the revision under section 264, you should give up your right to make any further appeals. Since this is very much known to you, I am not making you to write. What are the three recourses? 154, 254, 246 and 264. Then friends, I move to the May 2006 question. An SSE sustained a loss under the head income from house property in the previous year relevant to the assessment year 11 and 12, which could not be set off against the income from any other head in that assessment year. SC did not furnish the return of the loss within the time allowed under section 139(1). However, the SC filed a return within a time allowed under 139(4). Can the SC carry forward the loss set off against the income from house property? Of course, this is a IPCC question. That is, all of us know that section 80 says that unless you file your income tax return, loss cannot be carried forward. but their two losses reference is not there in section 80. One is a loss from house property, second is unabsorbed appreciation. So even if you don't file your loss return in respect of these two losses before the due date for filing the return, still the law allows you to carry forward those two losses is a point, right? Loss under the head income from house property, loss under the head income from house property, comma, unabsorbed depreciation can be carried forward and can be set off even if loss return is filed belatedly, even if the loss return is filed belatedly. Then friends, another aspect, May 2005, I am not reading the question, I will only explain it. Return is not filed before the due date, it is filed belatedly. Assessing officer levied the penalty under 271F to the tune of 5,000. Is it acceptable? Yes, unless you show a reasons for non-filing and they are genuine and they are satisfied, they have every right to levy the penalty under section 271F for your not filing the return before the due dates. Of course, practically in how many cases they are levying this particular penalty, sir? Practically we see very less, but if they do it, you can't say that you can't levy the penalty.